Welcome to Markets Now. I'm Michelle Rope with Scott Varilek with Kooima Kooima Varilek, and we have a lot of green on the board in both grain and livestock futures for a change. And Scott, had a few days where the cattle market has put some higher closes together, but cash news has been better. Is that what's been pushing it?
Yeah, and thanks for having me. And it's this roller coaster ride we've been on. Are we breaking for good? Is this the big one? Are we going back higher to break out? I mean, you can find what you're looking for, but when we just kind of hone in the fundamentals, look at the cash market, that's feeling pretty good. I mean, we've got some early bids this week in the South from 178, get it up to 180, and then up to 181. So it was able to kind of go in the right direction. So that feels good. And I think that there's some packers that are looking around for some cattle. I'm hearing names of packers that I haven't heard from in a little while, and that's a good sign. So I mean, if we've got these weights so big and we've got all of these numbers, why are all the packers really looking for cattle? And there seems to be some wheels going under some cattle to try to fill some regional places that are looking for cattle. So they're trying to fill the need. So I think that long-term tight supply, the reason that we're at these high levels is kicking in a little bit, and it seems a little bit evident. So the North has been a little bit on the quieter side. I mean, there's been some bids around, but haven't heard enough to say we've got big traction here yet. But I think that the North, they've got some leverage, and they're trying to use it. They're looking for some better prices, not willing to say, hey, we're going to start heading down. So seems to be a little bit of confidence on that front there.
Yeah, but even steady money at 181 in the South would at least stop the bottoming process, and we need to do that first before we can go up. The other help has been the stock market turning around, right?
Yes, after what we went through with that stock market, you see the cash market holding steady. That's such a victory, how we were able to kind of hold that steady and fight that off, because I think it was the day you had the Dow Jones down 900, and cattle traders are pretty nervous, and we're very much watching that market and seeing the break, and then it comes all the way back to close steady. And now it's been able to gain some there. Consumer confidence kind of gets a little boost. So that every day we can kind of put a little bit back on here. Hey, that feels good. Now we're not really, worried about that as much. We can kind of put that aside and kind of look at our own fundamentals. If we can look at our own cattle fundamentals, we're going to feel really good. We just don't need that outside noise coming in. And yeah, we've got an election coming up and expecting more wild swings, but the bottoming action there helps us out tremendously.
Absolutely. So technically, how do we look? The last time you and I talked, we had some gap lower openings, but we filled those gap areas. Now, where do we go?
Yeah, we gapped lower some of those, next summer months. And you don't want to leave those kind of gaps in those charts out there, because they measure down to some prices that are not very appealing, I guess, from what we're used to, and kind of scary a little bit. So we were able to fight back, close those gaps. We can kind of put that to bed, and I think that's a great sign. So we've had these breaks and rallies. The end of August we had a little bit of a rally, and we broke from there with our stock market and all the worries. Now we're just getting back above some of those levels today, and in all of this roller coaster action that we've had, the open interest just lays there. We change by a couple hundred contracts a day, so we don't have a big stick coming in and saying, hey, this market is out of the woods, we're going higher. Would like to see that for some more confidence for the follow through. So we don't have a big fund backing here yet, but at least we're putting some of those negative signs to bed. The long-term chart, we still have that trend line broken. We're kind of coming back and retesting that line. To really get some feather in your hat, I think we need to get above that old trend line to say we can long-term kind of trade this market. And that'd be kind of a front month lead, which the front month is feeling like it's just kind of here spinning. A lot of the buying action has happened in the deferreds. Those deferreds have really gained on some of these front months. So, and that's kind of what we saw in the last couple of years during this rally. Everybody thought, yep, we're going to be good. We're going to be good for a while. So those deferred months were the ones that were really propping us up. And that's what it looked like, at least in the last week here.
Yeah. And that would make sense if we think we're going to get into the tightest numbers end of this year into 2025, then the buying in the back months certainly makes sense. What about the fall feeder run? What are you thinking about, how's cash trade performing? Will it stay strong throughout the fall run?
Yeah, it's off to a really good start as we get into September here, and cash feeder prices, the reports I hear from guys it's sounding very positive. So we had some regional sale barns around here that are seeming to be off to a good start. Not enough. I don't have enough numbers to tell me, hey, we're really short on cattle or not, or we're having big runs. But the prices I'm hearing are good. There's still a lot of confidence out there, and the feeders are going to be the leaders here. And that if that's our first sign, as we enter into September, what these prices look like, it makes you feel pretty good. So, liking what I'm seeing there and what I'm hearing. It's too early to tell the long term, but I do like what I hear so far.
Yeah. Hog market looks like maybe it has topped, maybe from a seasonal standpoint, but we're kind of chopping around here. But is there a risk as we go forward just because numbers generally start to build seasonally, and are we going to have enough shackle space?
Yeah, in a market that we're all reaching and looking for what it's going to do, I think that's what I turn to is that seasonal supply, and thinking we have plenty of numbers coming. That's the camp that I'm in, and we've got a little bit of less kill capacity that we have to get used to here in Iowa. So I'm going to lean that way, that they're maybe due for a little bit of break, and we've got some tough sledding ahead. We've got ample numbers coming here that we're going to decide how we're going to make it through the season, and we've got weights that are up. So I mean, that's those two things there are going to tell me I'm looking for some more downside protection, I guess, in my opinion.
Gotcha. And grains are continuing to move higher here this morning. The corn market absorbed the higher yield quite well. Most thought it was going to go down. So can we keep going there? And then soybeans, obviously a sigh of relief because we didn't see an increase in the yield there. Are the harvest lows in, and can we continue to move higher there as well?
Yeah, big victory for grains, how they're trading the last couple of days. And to highlight your part of your question, the soybeans, yes, relief definitely, because I guess farmer reports that I hear, regionally, are how great these bean yields are. And luckily we've known this, throughout the year. That's what the market is priced in. That's why we have, cash corn in the 3s and cash beans in the 9s, because we know that there's a big crop coming. So we were able to kind of leave that number the same. And corn yields, that corn production, that's a big number. Traded that way right after the report, only to kind of crawl back and turn to a higher price. So action is great. We've got a wheat being the leader today. We've got a little bit of, now we're talking about Russia, Ukraine, and Black Sea region, and some of the world supply issues. So we're able to turn the page on a whole of these grains to some of those stories that are a little bit more positive. The market, we talked about dry in South America. We talked about our exports getting better. So all of that demand news is feeling like that's starting to kind of trump where we've been trading the supply all summer long. So to me, it's acting like the harvest low is kind of in a little bit early. Yep, we'll have some more pressure maybe coming yet where it could retest, but I think the way we were able to fight off that report yesterday and move things higher here, weaker dollar happening today, like what I'm seeing there. I don't know that there's enough people respecting this. I think we all got caught in that bear mentality with this crop size, but I think it's definitely time to start to look at the big picture here and what we could do on getting these markets to move a little higher.
Yeah, I was going to say, though, we don't have a lot of new crop priced from what I understand. So how much should producers be pricing here at this point?
Yeah, as far as a percentage, it's to everybody for their own, what they're really thinking. But with these markets at low levels, if you're looking to, move some of that grain, but you still want some upside, I think some of these different option prices are still hanging on to as a pretty low level. So I think that there's moves that you can do for some re-ownership. I'm trying to respect some of this rally. I mean, like wheat just rallied, 75 cents off the lows. So yeah, probably going to want to be moving some of that, even though we have some good news, but that's a nice rally to catch. And, corn, soybeans are still low enough to where it's not like I'm going to sit here and start moving a bunch, but I don't want you to call me in July and August and say, what do I do with all my old crop corn? That's your plan, was to do that. So I don't know if I can make that better. So So doing chunks at a time on these rallies is okay. I think there's some great opportunities for re-ownership here. If you get some of those regional basis issues where you get a little boost in basis, take that. There's some other moves that you can do rather than sitting on that, taking your money now, high interest rates. That's all very appealing to me.
Yeah, we're hearing of some positive basis around ethanol plants and whatnot. So that really speaks to your point. All right. Thanks so much, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.